But let's start there. The uptrend intact that Jess was just talking about is something that I think has been thrown a lot of cold water on since that kind of rally that we saw in January. What do you do from here?
So I think we have to acknowledge the fact that basically the S&P 500 has gone absolutely nowhere for 4 months. We are stuck between 3,800 and 4,200. And my apologies, but I'm going to beg to differ just a little bit on the effect of interest rates on stock prices. It has been a constant since the top of the market in January of 2022 that if yields go higher, stocks go lower. It doesn't always work tick for tick, although there's lots of times when it does. And you look at the last several days, and actually the pressure on yields in the U.S. is coming from Europe. We've seen a lot of hot inflation data out of Europe, and that's really caused the pressure and obviously fed into the selling. But this is an environment where stock picking rules supreme. The longer you go sideways, the more companies and themes are going to differentiate themselves from each other.
I'm glad you brought up stock picking, because something that I noticed, and it's from 22V Research, and Elena Popina on our equities team did a good story about this, and the correlation of the movement between growth and value stocks has actually jumped to the highest level since at least 2005. So how challenging does that make it for stock pickers to find some sort of market dislocations when you have a divergence like that?
Well, I'm not so sure about that data because honestly, if you look at going back to last year, value outperformed growth very substantially. And then if you look at the first, couple months of this year, growth has outperformed value quite substantially. So I would differ with that. But the question is, where do you go going forward? And from our point of view, the fact that yields have moved the way they have, with seemingly no end in sight, and obviously we know the Fed is likely to hike twice, perhaps 3 more times before it looks around and decides to pause. That to us says that the value orientation is likely coming back, particularly since we saw a speculative really peak at the beginning of February when the names that were the biggest losers last year went up to 20% outperformance over the biggest winners, and that started to turn. We think there's more turning to be done.